Assalamualaikum. My name is Athirah Balqis. Today I will be talking about Malaysia financial system. In Malaysia, we are divided into two, which is financial institution and financial markets. For financial institution, the first one is banking system. Banking system is providing the major portion of assets in the system. What they do is they accept deposits from the surplus units and they giving out loans to the deficit unit. The second one is non-bank financial intermediaries. They are specialized in promoting economic and financial stability. They open up services such as insurance company or saving institution. This will give benefits to the user. The second one is financial markets. Financial market is mobilization of short-term funds. The surplus unit group can invest their money in this market to get additional money. Next, we move on to financial institutions in Malaysia. As we realize, there is a lot of conventional bank, such as Malayan Banking Berhad, CIMB Bank Berhad, FIN Bank Berhad, and Public Bank Berhad. Oh, not to forget Islamic Bank in Malaysia, such as Bank Islam Berhad. But what are the differences between Islamic and conventional bank? Okay, for the first one is Islamic banking based on Islamic Sharia like Quran, Hadith, and Ulama. The second one is Islamic banking will also lend money to the corporation who need extra funds. As the corporation get profit, the profit will be distributed based on the agreement between Islamic banking and the corporations. For the third one is Islamic bank will ensure the profits are according to the Sharia compliance. For the fourth one is Islamic banking will pay zakat and they also take a role to collect zakat. The last one is Islamic banking will ensure that both parties get benefit from their services. In conclusion, we can see that Islamic banking are more transparent with their services compared to the conventional bank. In the end, conventional bank are more concerned about their profits through interest.
Hi and Assalamualaikum. Financial intermediation refers to the practice of linking an investor and borrower. Acting as third party, intermediary aims to meet the financial needs of both parties to mutual satisfaction. Financial intermediaries provide a middle ground between two parties in any financial transaction. A prime example will be a bank, which serves many different roles such as bank act as a middleman between a borrower and a lender and pulls together funds for the investment. The intermediary accepts a deposit from the investor or lender, passing this on to the borrower at a high interest rate to make up their own margin. The example of intermediation process is when banks act as financial intermediaries, they can accept deposits. However, other types of intermediaries don't involve a deposit. Instead, the intermediation process involves the movement of funds from one party to another. The intermediary act as factor in this case is managing the cash flow. Example of this type of intermediary could include a financial advisor who connect investor with businesses or a pension fund that collects money from members and distributes payment to the pensioners. The next one is the roles of Bank Negara Malaysia. The roles of Bank Negara Malaysia are to promote monetary and financial stability, to provide environment that support a sustainable growth of the Malaysian economy. Bank Negara Malaysia's monetary policy is to maintain price stability while remaining supportive of growth. It is also responsible for the financial system stability. The next role is Bank Negara Malaysia implement measures to strengthen the financial markets, including the foreign exchange market. It also oversees the nation's payment systems infrastructure, which emphasize on the efficiency and security of the financial systems. Next, Bank Negara Malaysia acts as the banker and advisor to the government and provides advice on macroeconomic policies and the management of public debt. Bank Negara Malaysia is also the sole authority in issuing the national currency and in managing the country's international reserve.
Assalamualaikum warahmatullahi wabarakatuh. My name is Alia Farhana binti Ablah, and today I want to talk about financial market. Financial market is where the traders buy and sell the assets. Financial market include stocks, bond, foreign exchange, derivatives, and commodities. In the financial market, they are divided into two groups, which are money market and capital market. Money market refers to a very short-term investment. When it is used short-term investment, it takes less than 1 year. So money market is raised through the short-term funds when buying and selling of the short-term securities. The example of money market is government bonds, commercial papers, and the treasury bill. So for the capital market is referred to a trading that is used long term. So when it is long term, it is more than 1 year. Capital market is where the long term fund is raised through the bond market that is deal with long term, such as bonds, and the stock market that is deal with the securities. In the summary, financial market exists because to give land to people who needs, to make investment, to give borrowing, and also financial market is take out the profit to split down into short-term activity and long-term activity, such as money market and capital market that I explained just now.
Last question for this video is how to demonstrate the managerial skills of bank performance and also non-bank performance within Malaysian industry. So we will go through 4 things to demonstrate the managerial skills. First, we will go through to the profitability. So profitability is to measure the earnings and also the profit of the bank. It will show us the ability of the bank to manage their operation. Why? Because profitability allows the bank to absorb the losses or make any expansion activities in the bank. So the most calculation profitability used is return on asset, return on equity, net interest margin, and also spread. What can I conclude from this profitability is the higher the profit, the better performance of the bank. Is liquidity. Liquidity is to measure the ability of the bank to meet the anticipated or unanticipated demands for fund. The example of demands for fund is the withdrawal of depositors or check clearings. Bank should be balanced between short-term and long-term asset. To be remembered, bank also need to manage their liquidity while in the same time they need to ensure the profitability of the banks. What can I conclude for this liquidity is the higher of the loans, the lower the liquidity of the bank. This is because loans are known as high liquid items in the bank. Next, we want to measure the asset quality by analyzing the non-performing loans, recoveries, and capital adequacy. We must remember that non-performing loan need to be a minimum level because it can give an adverse impact in earning capacity in the banks. The
bank should be manageable by imposing the strict requirement or applying an effective tool for the loan application. So what can I conclude for the asset quality is the lower the non-performing loans, the better the quality of the asset. The last one is capital adequacy. Capital adequacy is they want to protect their depositors and shareholders' interests. So the bank required to achieve a minimum level of capital adequacy, which is 8%, because with 8% it determines how the bank can stable the financial system. So to be more specific about this point, I will conclude that the higher the capital adequacy, the better the ability of the banks to protect their shareholders and depositors. I think that's all from us. I wish Selamat Hari Raya and thank you for watching.